Good afternoon, everybody. Thank you for joining us. My name is Marina Poljak, and I'm the event coordinator for the Windsor-Essex Regional Chamber of Commerce. I'm going to give everybody a minute to settle in and log on, but in the meantime, I'll just share a couple of pieces of information with you. So we encourage you to ask questions throughout the webinar, and we will be monitoring the chat and the Q&A, so feel free to post them in there, and we will address those. They may be answered organically. And if they're not, we'll take them up. We do save all of the questions, so if for some reason your question was not answered during the live broadcast, we will address them and get back to you. Also, if you have any questions, feedback for the chamber, or any suggestions on webinars you'd like to see in the future, please send them to info@windsoressexchamber.org. And we also encourage you to go to our website. We have a COVID-19 tab, and we post all of the most recent information and very helpful resource links for the business community. So check it out. You can also see past recorded webinars on there. This webinar will be recorded, will be available for viewing by the beginning of next week. In the meantime, you can see our past webinars on our YouTube channel. Also, we update our social media pages very frequently, so you can follow us on Twitter, Facebook, LinkedIn, and Instagram. And I will post our handles in the chat once we get started. So again, settle in and we'll begin in about a minute. Okay, again, for everybody joining us, thank you so much. Today we're talking about restructuring and turning your business around with special guests from KPMG. At this time, I'm going to pass it over to our President and CEO, Rakesh Naidu, who will introduce our guests.
Thanks, Marina, and good afternoon to everyone. I'm hoping that everyone is doing well, that you and your family is staying healthy and are safe. For those of you who have been with us on the Business Briefs Interactive Seminar, you know we're offering this to our business community here, not just our members, but to the entire Windsor-Essex community. And it is through this that we are communicating to you on topics that are of interest to you, to the business community. We've received a lot of inputs about our webinars, especially on the topics that are of interest to you. And based on the inputs that you've provided, we have identified experts, whether it's local or experts that we have even outside of Windsor-Essex. We bring them and give you an opportunity to hear from them and also ask questions of issues that are put into your business. And through these webinars, we're hoping that you are getting the help and the support you need during this very difficult times. As you know that the social distancing continues all over Canada. In Canada, we've had about 42,000 plus cases of confirmed COVID cases, about 13,500 plus in Ontario. Locally, we've had about 500 plus, and unfortunately, we've had 35 deaths. So this is nowhere done. This is still something that all of us are battling, and hence we need to be even more careful in terms of how we are conducting ourselves, ensuring that we are maintaining social distance, we are staying at home as much as possible, and we're giving our utmost support to the healthcare workers and the first line workers. Um, in the past, based on the inputs, we have brought in experts so that you can benefit from whether it was to learn about the new government programs that have been announced, how do you leverage them, what are the eligibility criteria, how do you take care of your workforce, staffing issues, or if you were to look at doing more or enhancing your digital marketing or enhancing your presence online. We've brought you those topics and you've heard from the experts. So it's our intention that we continue to do that so that this, through the webinars and through the expert advice that you receive, you can, you can navigate through this difficult times. As you know, the government has continued to offer programs and support, whether that is the federal government, provincial, or local. We have to acknowledge here that each level of government has been doing their best, to provide the support that is needed. As recent as yesterday, there was the announcement of the commercial rent relief, and today, this afternoon, Ontario also announced that they will be supporting commercial tenants as well as residential tenants and the landlords as well. So this is a very welcome news. This will go in further supporting the businesses because we all know that one of the largest overhead that many businesses, especially small and medium-sized businesses, have is rent, and the relief is much appreciated. There's also many different programs that the government has announced, including the wage subsidy program, which will be where you can start accessing that and applying for it from April 27th, I believe. Then, of course, there's the SEBA program, which is the business account program where you can get loan, and up to 10,000 of that loan is forgivable. And then there are the other programs that have been announced for students, help, SERVE, which is an assistance for those that are self-employed or those that are not employed at this point of time. So these programs are good, and it is much needed, and businesses are reeling. Every day that we go through this, the debts are increasing, the anxiety is increasing, and we understand that. And whatever support is being announced is great, is most welcome. But I think more needs to be done, and that's the Chamber's opinion. And this is what we're hearing from our business community and from our members. Access to capital is definitely of great importance. Ensuring that the debt is as low as possible, because most of the companies are increasing the debt as time progresses, and even the programs that are offered, most of them is going to increase the debt further. So how do we really navigate during this time? While we need to take care of our business, we also need to prepare for the future. And there are regions that are talking about recovery plans. They're talking about getting the economy back on track. While it is still some distance away, at least in Ontario, there are other provinces that are looking at coming back slowly but surely. So, at this point of time, the businesses have two issues to deal with. One, how do you maintain your business, and how do you avoid insolvency at this time? How do you deal with the current crisis? And then also, what can be done to restructure a business, and what kind of restructuring processes are available to companies and creditors, whether that is, balance sheet restructuring or whether that's operational restructuring. What are some of those options available? And then how do you access capital during these uncertain times? What are some of those avenues and what are some of those modes available? So to talk about all of this, we've invited experts from KPMG, and we've got two very well-known people, Doug Doddy, who's been in Windsor and has worked with several Windsor-based clients. A lot of them have been automotive clients. He's a partner with KPMG, and he's the managing director of KPMG's corporate finance. He's based in Waterloo currently, but as I said, he was in Windsor. He used to live in Windsor, and he leads the Southwestern Ontario's corporate finance practice. And he and his team have provided corporate finance and transaction services, advice in connection with divestitures, acquisitions, financing, business valuation, due diligence and business assessment to owner managed and medium to large private companies. And joining him is Nick Brereton, who's a partner in KPMG. And in KPMG's Toronto operation, which is in restructuring and turnaround. That's the group that he's with. And he's been there for more than 30 years. His experience includes business assessments, formalization of business plans and strategies, and design and implementation of formal and informal corporate reorganizations. So Nick and Doug will have a presentation that they will walk us through. And then during the presentation, if there's any question, feel free to ask that in the chat box, or you can save it towards the end of the presentation as well. So with that, I will turn it over to Doug for him to get started with the presentation. Doug, over to you.
Okay, well, thanks very much, Rakesh. As Rakesh said in his introduction, both Nick and I have done, a fair amount of work in Windsor over the years. I was actually a resident in our Windsor office from the mid-90s until the Great Recession, and unfortunately had to move up to our Waterloo office in 2010. But still spend a lot of time with our clients and friends in Windsor. Vicky, if you want to move the slides along. So, both Nick and I spend a lot of time, in the automotive sector and in the tool and die sector and in the, the machine and equipment building sector, which are all, fairly key drivers to the Windsor, to the Windsor economy. And, having lived in Windsor through the ups and downs, certainly, everybody knows that the van plant and the spin-offs from the van plant are pretty significant for, businesses big and small in the Windsor community. So Vicky, if you want to move to the next slide. So just in terms of agenda today, what we thought we'd go through is just a few high level, economic and lender comments in terms of the current landscape in the, in the Canadian and the Windsor market. And then, Nick's going to get, into some, fairly good detail in terms of the, the restructuring aspects of dealing with businesses that are in need of that at this point in time, or maybe in need of it in the next few months as the economy changes. And then we'll also talk about, some cash flow forecasting, different options, and ultimately, I guess, how we can help you with with some of your needs. So Vicky, just next slide, please. So just in terms of the current economic background, and general economy obviously is very stalled out at this point. And, I think that, particularly if you look at the automotive sector, it's interesting because, with the assembly plants closed, obviously the parts, the parts plants are, operating at a very, very low volume, if at all. And, talking to one client who, normally has 500 people working in their, on their shop floor, and they've currently got 25 employees doing service, parts, and maintenance. So it's, it's pretty tough if you're on the parts side of things. And, the tooling, tool and mold sector, is a little bit, is a little bit better. If you talk to the guys at CAM and, some of their members, they're, they've shifted and they're doing some, medical related work, and they're still doing, the mold programs for future launches are still moving along in some cases. Some have been delayed, some have been canceled, but there is some, level of optimism in the tooling sector, albeit the future of the tooling sector, it may see reduced volumes from the past few years. So, I mean, I think that sort of tempers, a lot of the certainly the Windsor economy. Just a brief comment on M&A and transactions. The end of March really, I mean, saw things fall off a cliff. Larger transactions were, for the most part, canceled because of, really sort of lender concerns in a lot of cases, and just the, future uncertainty of where the market was going. And, that's really resulted in a result of, a bit of a credit crunch, and, bank uncertainties in terms of, leverage and how much they want to put into new deals, in the short term. Next slide, Vicky. So just in terms of the, the lender market, and in what we're hearing from, from the banks and from alternative lenders, and the folks at BDC and EDC, when when the COVID crisis really locked down the economy in late March, what a lot of the banks saw was essentially a run on cash. So there were a lot of large companies that really drew down their credit facilities pretty quickly, and that put the banks in a tough position from the perspective of their ability to lend. And so consequently, really, they've to a large extent, they've taken a pretty much an inward focus on their existing clients. And I mean, it's interesting in talking to talking to the banks over the last month. I mean, it was certainly very much a pure inward focus in late March. And, now some of the banks are looking at, potentially looking at new clients, new transactions. But I think they're quite cautious on it. And, as someone said to me a couple of days ago, they said, it's really got to tick all the boxes for us to be putting new money out to a new business that is not an existing client. So, I think that conservatism, and, coupled with that is you've got, tightening of covenants, and, ultimately there'll be, there is, pricing increases on a lot of debt, because people are just looking, banks are looking at it, and lenders are looking at it and saying, is there increased uncertainty and increased risk in a lot of businesses going forward in the short term and medium term? So, and I think that, and we're not really going to touch on it today, but, the the folks at BDC and EDC, I mean, they're great programs that they're putting together with the Schedule A banks in Canada. I mean, we do hear mixed comments from people in terms of, they're very effective, or they're a little bit slow on getting it rolled out, and it, doesn't always apply to every sector quite clearly. But there's certainly an effort being made to work on that. And coupled with that, I mean, the banks are working with people at this point to defer principal repayments. And really, I think the the summation of that is, in these uncertain times, I mean, the banks want to defer problem loan decision making, because they're not really sure, I mean, in the traditional sense of, putting somebody, straight up into receivership bankruptcy, just might not be the right answer, because they're not really sure what they're going to realize out of that. So, I think the banks are being, I think Nick would agree, the banks are being quite patient on that at this point in time, but I don't think that will last, that won't last forever. The other interesting thing from a lender perspective at this point is, there's been an emergence of, what we'll define as alternate lenders. And, these are in some cases distress lenders, special situation lenders, who are frankly, seeing an opportunity to capitalize on this market. And, if there's a gap between, your current, Schedule A lender, EDC, BDC. These sorts of lenders are certainly interested to jump into the right situations, albeit at a fairly, high price. So I think, Vicky, if we skip to the next slide, I'll turn it over to Nick to, talk about some of the, restructuring and, then some insolvency related matters that, should be of interest to this audience. Thanks. Over to you, Nick.
Great. Thanks, Doug. So let's turn the presentation over to the restructuring side. And when I think about a restructuring, the easiest way to think about it is in the context of either a balance sheet restructuring or an operational restructuring. In the case of a balance sheet restructuring, you're really thinking about the capitalization of the business, and so its level of debt and the amount of equity that it's got. In an operational restructuring, you're really thinking about ways to enhance the profitability and the cash flow of the business. Next slide, please. From a balance sheet restructuring, it's pretty straightforward. From a debt perspective, you're either looking to have debt forgiven, either outright or in the form of a conversion to equity. And obviously an equity injection is just what it says. There is obviously significant tax implications for debt forgiveness and debt conversion, so that at a minimum they will grind down tax bases, and in certain circumstances could end up resulting in income inclusions. So you actually have a tax liability when you come out the other side. I think right now it's very difficult to really do a balance sheet restructuring for a couple of reasons. One, I'm not sure that we've entered into the recovery side. Well, we haven't, I don't think. And so until you really know the size of the hole you're trying to fix or fill in the balance sheet, you really can't start the restructuring. The second issue is that there's real, I think, doubt as to whether anybody can accurately forecast future economic performance of their business. And so when it comes to people making decisions, particularly to inject equity, it's very difficult to make an informed decision. So that's really all I wanted to say about balance sheet restructurings. In terms of operational restructurings, as I said, this is all about improving the profitability of the business or enhancing or unlocking liquidity. You'll see that we've got a list here, and I don't think these will come as any surprise to anyone listening today. These are all things that you would be thinking about, I would hope, in your normal operation of your business. I think, when we look at it from elimination of discretionary spending, the easiest way to go about that is to really pull out your P&L statement and just start at the top of the expense list and just go through item by item and really be very rigorous on the approach. And to be honest, in today's day and age, I think people have to be a lot more ruthless in their approach on this stuff than probably they've ever had to before. There are some very uncomfortable decisions that people are making, given the environment. Rent deferral, look, I'll spend just a couple of minutes on that, just because I'm actually on both sides of that, on different files I'm involved in. I think that, first of all, it's no surprise that there is an awful lot of rent deferral. I'm sure, people are, well, it's in the newspapers and you're reading about it. I mean, I can certainly confirm that that's the case. I'm involved in a situation involving, commercial and office space throughout Ontario. And so in April, there was a 25% deferral of rents, and May is expected to increase. Certainly, what I'm hearing is, though, that industrial is actually nowhere near that extent of deferrals. So generally, people are paying up in industrial space. Retail, of course, is very bad. I'm hearing, 70%, 65% numbers, and with the expectation they'll get worse in May. In terms of, the approaches that landlords are taking, I think, first of all, I'm finding that some landlords are not prepared to engage in discussions. And I'm doing this on a sample of about 12 different landlords on about 25 properties. There's a real reluctance to enter into anything formal for those that are prepared to have a dialogue. And I think what's driving that is that everybody's waiting to see what the government is prepared to do in this area. And so they, the landlords, and for that matter, the tenants as well, are reluctant to put something to paper in the off chance that when a program comes out, it will end up having been structured in such a way that precluded access to that program. So, the situations where those dialogues are going on, what I can say is nobody is prepared to talk about abatements, so the elimination of forgiveness of rent. It's all about deferrals. For those landlords that are talking about deferrals, they've been talking about blending in the amount over an 18-month or 24-month period. But again, nothing in writing at this stage. Labor cost reductions, again, I think no surprise. My comments in there are just really twofold. Obviously, if you're unionized, that's going to constrain what you're able to do. Second, you should be evaluating that in conjunction with the government programs that are out there right now. And then finally, not knee-jerking, and then if you're going to do the cost reductions and labor headcount reductions, my recommendation would be that you do it once, and then communicate that certainly you think you've stabilized the situation. You can't say you're never going to do anything further where you've got remaining employees, but what you try and say is, we've right-sized it to the situation, and we think we don't need to do any further steps if we're able to continue based on whatever the projected outcome you're using. Anyway, I won't dwell on that. And then finally, just in terms of the reduction of interest rates and principal amortizations, again, from the lender side, I think my experience there is that they want you to have attempted to access the EDC and BDC programs first, and thereafter they're prepared to have a dialogue, but they're going to want information, and to be honest, you're going to have to demonstrate that you're in dire straits, and it's essential to the future of the business. So, okay, Vicky, next slide, please. Just thought I'd touch on working capital. Obviously, again, this should come as no surprise to everybody. I would hope everybody's focused on it. My thoughts are that really organizations that manage and optimize their working capital well, it's really a tone that's set at the top, and it's really a cash culture where cash management's a priority. And so, our cash teams is a little bit time consuming, but in today's era where you're having to make hard decisions often in terms of paying Peter or Paul, having involvement of all of the functional heads is important to make sure that you don't make a mistake in terms of prioritizing those precious dollars. We're going to touch on it a little bit later, but short-term cash flows are also essential. In terms of the working capital cycle, again, generally, we're always surprised at the fact that there's most situations we go into, there's room for improvement in this area. Obviously, it's about minimizing your receivables, minimizing the amount of inventory without impacting, your customers and the service levels, and maximizing payables. Next slide, Vicky, please. So we focused on the short term, and those are really immediate hits. Some initiatives are take time, and that's what I've referred to as the mid to long term initiatives. I think that the starting point, for this is to think about it in the context of where, when we enter the recovery stage, you see the demand being for your business, and what you think the size of that market's going to be, and the scope of your customer size. And so with that as the starting point, you then need to look at your existing operations and decide whether you've got the right size of operations to meet what you think that demand is. Obviously, it's very difficult to do that today, but this is, we'll come back to it again, but where sometimes scenario planning makes an awful lot of sense to see kind of where things could go. The only other comment I was going to make, again, because I don't think any of this is news to good business operators, is that you want to try and minimize the amount of capital that is invested in your business, and as a result, you're going to go through, and if you've got the opportunity to do a sale and lease back, and you haven't got a really strong balance sheet, you should be considering those things. So why don't I hand it back to Doug now, just to touch a little bit on cash flow forecasts.
Okay, thanks, Nick. So I'll just touch on short-term cash flows, and I'll say a little longer-term cash flow quickly. This is something that people should be, generally looking at in all situations, and just not in the current situation. But a very fulsome, integrated cash flow, which incorporates, I say integrated meaning cash flow, income statement, and balance sheet forecast, is something that just helps business with management decision making. In the current times, really what, and I'll say again, particularly relating to some of the auto businesses and the ramp up of some other service and manufacturing businesses that are currently operating at very low levels, is really to determine, where your liquidity constraints are going to be, and really, what discussions you should be having with your banks in terms of what gaps you may be seeing in the short term. So, typically what some lenders like to see is, and I'll say in the current situation, it's become more interesting to them, is is a very short-term cash flow, and typically defined as a 13-week cash flow, to look at really the ebbs and flows and the requirements over the next, each week for the next 13 weeks. And then, layering on to that is really, a 2 or 3 year monthly projection, which again really shows what your banking requirements could be. And, challenging times to figure out what demands are. And, talking to some of our automotive clients, they're trying to look at what volumes are going to be. And, one of the questions that's come up with people is, if the OEMs, if the OEMs, start up again in early May, at what volume levels do you think they'll be in, June, July, and August? A lot of the OEMs are saying that they're going to ramp up to 50% fairly quickly. Which I guess is sort of through May and into June. Thereafter, it'll really be dependent on inventories and, consumers coming back into the showrooms when they're opened up. A few other points here, just, in terms of, your assumptions, you've got to take a good, hard, conservative look at things, as Nick said, discretionary spending. How are your cash collections being impacted by the current situation? Are you getting paid by your customers? And I think really, overall, this cash flow modeling exercise has to, be able to deal with and answer a lot of the stress test questions that your bank is likely to ask you. In terms of the what if scenarios and, the upsides and the downsides of where you think your business is going to move to in the short and medium term. So I'll pass it back to you, Nick.
Okay, thanks, Doug. So before I get into formal restructuring options, I just thought I would spend a minute talking about informal restructurings. And so obviously it is an option for you to approach your creditors and attempt to, outside of a formal process, compromise your debts. And the problem with that is that if you're only dealing with a couple of people, then it can be feasible. But obviously, the more stakeholders, more creditors that you've got to deal with, the more problematic it gets. It's difficult to do that and keep it confidential. You have to be careful in terms of not making an acknowledgement of insolvency, so that can then be used as a lever against you. But I think the biggest problem is that it's very difficult to force people to make the decision. So by definition, you're always asking people to take less than they're currently getting, or to give up a right. And so they're naturally incentivized to drag the process out. So it's difficult to bring finality to it. Practically, you also end up having to guarantee what I call as no most favored nation clause. So, to speed this along, you need to take the approach that if you give a better deal to somebody, then you will give that to everybody that you've got to deal with previously. Because without that approach, people are not prepared to commit until the very end. So not impossible to do an informal restructuring, but very hard work and really long odds, in my view, unless it's only a very small handful of stakeholders that are very supportive. All right. In terms of the formal restructuring options, I think the situations we usually find people doing this in is if you usually got a cash wall coming up and they haven't been able to either get all of the stakeholders to the table, or they've got a few holdouts. And so you end up, to restructure, there are really two avenues for companies. One is the Companies Creditors Arrangements Act, and then the other one is the Bankruptcy and Insolvency Act, and it's a Division 1 proposal, it's called. Both of these are debtor-led, and as a result, the existing management stays in control, and the existing ownership continues to retain control over the assets and operations. Just like a word about, I guess, pre-planning. I can tell you that just lurching into one of these filings is absolutely not the preferred route. To have the best likelihood of success, you want to do a little bit of pre-planning for this. And, for example, you really need to figure out beforehand what your financing needs are going to be during this period. You want to develop communications. You want not only to figure out the financing, but you want to also line it up. And we'll touch on that very briefly in a minute. Secondly, you want to have a communications plan that is ready to hit the minute that you file, so that you can get out to your customers and explain the situation and put their minds at ease, that you can communicate to your suppliers and minimize disruptions with them just cutting you off because they don't know what's going on. And that pre-planning also will minimize the cost of this thing, because it should minimize the amount of time that you spend in the process. The final comment I would make is around secured creditors. It is very difficult to succeed or have a successful restructuring over the opposition of your secured creditor. I mean, the only way that that's going to happen is if you're able to pay them out at the back end of the restructuring. And so, with very, very few exceptions, our advice is always that you're better off trying to approach the secured creditor up front and solicit their support for what you're trying to achieve. And that usually means being able to explain to people up front where you're trying to get to, and that's, again, implicit in all of this, and maybe I should have said it earlier. Again, you don't lurch into it. You basically need to figure out what I want to be as an organization before I go into this, or before I engage in discussions with stakeholders, and have a solution and a plan as to how you're going to get there. And so, coming back to the secured creditors, they're usually your first stop, because you can't get usually any additional financing without them agreeing to it, or there is the ability to prime, and we'll come to that. But again, that's difficult, and obviously your existing secured creditor is most familiar with the situation and you, and is usually the easiest to convince to go along if they have confidence and trust in management and the owners. So quickly, in terms of the two options, the Companies Creditors Arrangements Act is really designed for the bigger companies. So for people on this call, I would expect that generally you want to be in the Division 1 proposal. It's going to be a ton cheaper. So the CCAA is for companies with 5 million or more of debt. Under both proposals, you end up a proposal or plan of arrangement under the CCAA. You get a stay of proceedings, and so effectively that means that as at the date of filing, creditors are not able to take legal action to enforce their debts. There is a court officer appointed in a CCAA called a monitor. They actually are there to assist the company in formulating their plan, but also to bring transparency to the process. And so they will be providing periodic reports to the court and by definition to the public that outlines how the company has been performing, high level from a cash flow perspective, and how they're progressing in terms of their restructuring plan. I've touched on debtor in possession financing. That's a prerequisite. You have to have financing, obviously, to go through a restructuring. The nice thing about both of these restructuring statutes is that you can prime or the existing lenders. So effectively, the new money comes in at the top and will rank in priority to all existing secured creditors. It's a court order, so the court has to grant it. Again, I come back to the comment about cooperation of existing secured creditors. That is on notice to them, other than lights on money day one, and it's difficult to get over their opposition. The process is expensive, hence why you want to be in Division 1, but the CCAA is very flexible, so it allows you to be fairly robust in terms of what you're trying to achieve. You can actually run sales processes and so on through there. If you are not successful in a restructuring into the CCAA, there is no automatic bankruptcy, but the stay is lifted. So creditors can enforce. Under the BIA, it's available to all companies. It actually does not require a court application, unlike the CCAA. So it's just really a form that is filed with the Office of the Superintendent of Bankruptcy, which is a government agency. And so generally, unless you need dip financing or you're looking to sell some assets along the way, the Division 1 can be done almost entirely outside of court. Again, there's a monitor, same concept as under a CCAA, but here's the rub in terms of the Division 1. You're initially limited to a 30-day stay, and it's a maximum of 6 months. And so that's an issue for complex restructurings. And then finally, if your proposal is rejected and under both statutes, you basically present your plan to creditors. Like creditors are organized into classes, and then each class needs to vote and approve. And it's at least a majority in number and dollars. It varies, but so if that's rejected in the case of a BIA proposal, it results in an automatic bankruptcy. So the stakes are a lot higher in the process. Next slide, please, Vicky. So just some of the other comments. I mean, we've touched on suppliers. The nice thing about this is they're forced to continue to supply pursuant to their existing agreements, subject to they can ask to be paid COD. And so that can often be important when you often have strained or have been cut off from suppliers. The whole creditor management is really where I think this is better than the informal arrangement. I mean, you've got deadlines that you can impose on people in terms of our financing only goes until such and such. We promise that we are going to have a claims process and so on. So you can drive the time frame and the dialogue and the discussions much easier in a filing than outside. Only other big thing, I'm sensitive to time here, is I really think that if you're going to maximize the likelihood of success, you need to go into this with the perspective of being transparent with your creditors and build some trust. Because the first thing that I ask people when they call me about, like, I've got this proposal and should I vote for, and one of the issues is do you trust management, and do you have confidence in their abilities? Because if the answer to either of those questions is no, it's very difficult to support a restructuring. So with that, why don't I turn it over? Oh, sorry, I've got one more slide quickly. Look, I'm not going to spend any time on this one. This is really about compromising debt other than bank loans and trade debt. So that's publicly issued notes, bonds, debentures. I would think for most people that's like on this call. It's not really relevant, but it's an option, and it's a lot easier than the formal filings under the CBCA or provincially, the provincial equivalents, the OBCA, Ontario Business Corporations Act here in Ontario. You can actually do an exchange of debt securities. And so it allows you to issue a new set of debt, by definition smaller, or do a debt to equity conversion. And so, again, it needs court approval along the way in terms of what you're offering people in the final plan being acceptable. But this is also a vehicle. So I think we should, that was all I wanted to talk about. So Doug, why don't I hand it over to you to finish off?
Okay, well, thanks, Nick. I think we've covered a lot of things here today. I mean, some of the key takeaways, and, I don't need to go through these, but, I think, Nick mentioned it is, certainly, trust and looking at things, from a clear lens is very important, whether you're, putting together, cash flow forecasts or, looking at improvements in your own business, and certainly in dealing with your lenders, there's certainly a heightened sensitivity right now with lenders, and I think really we can give people is take a hard look at your business, and if you do foresee a shortfall, deal with your lenders and be open and honest with them, sooner rather than later. If you see that there is going to be a gap at some point, whether it's when auto parts ramp up again and your working capital's been depleted, I think it's better to go to them than sort of fall off a cliff on your cash flow. So next slide, Vicky. Just just again to wrap up before we have a little bit of Q&A with Rakesh. Some of the areas we can help you with is, we can certainly help you looking at your forecasts, and sort of whether it's a second set of eyes or working with you to do a very detailed financial model for you. We also do have a team that will go in and do a diagnostic report on businesses to look at are there things that you can optimize, and again, it's really a second set eyes for management in just trying to improve your business. Nick and his team are always available when it gets to the restructuring side of things formally, and also just in terms of financing. That's what I spend a lot of my time doing in both good and bad markets, is assisting businesses with, whether it's with their existing lenders or expanding beyond that. So, I think at this point, Rakesh, if there's any questions, we'd be, happy to address them.
Thanks, Doug, and thanks, Nick. That was a great presentation. A lot of valuable information there, a lot to process, a lot to digest, and rightly have provided some good takeaways. There are some few questions that we received from our attendees. I'll get to that, but I just wanted to know, even from the Chamber's perspective, you talk about short-term forecasting. What are some of the assumptions that one would have to take into account for the short-term forecasting, even for 4 months or 6 months, or even if you're doing a monthly forecast, because that would be based on, when the economy opens up, when do you get to normalcy, to what extent it opens up, and how much of your operation comes online, right? So how do you really handle that?
Well, I think that, if you look at, a lot of businesses, they are talking to their customers. Obviously the macro assumption of when the economy opens is, it's not under anyone's specific control. But, if you take the auto industry, for example, right now they're suggesting that, the assembly plants will start back into some level of production, the week of, May 4th or May 11th. And, they are thinking that, the initial volumes that they're going to be producing will be, plus or minus 50%, right? And, this obviously the supply chain in the auto industry is pretty complex. And, there's been discussions between, the Mexican government and the Canadian US government to make sure it's all synchronized. So, I think if you're sort of in that parts business, you're going to look at it and say, well, what programs am I on? In terms of if I'm on a program where right now there's a significant amount of inventory sitting in the market, then it might be tough to look at that and say that's going to be one that ramps up to 50% quickly. It may operate less than that because, the OEMs are going to manage their volumes as well. And I think, again, if you look at the Windsor marketplace, I think it's, a lot is driven off the auto sector. But I think it's really a case of, if you're in a B2B business, talking to your customers to understand what they're seeing. There's businesses, in Windsor that make building products, construction products. Understand where you think your customer is going to be, because in the construction sector, a lot of businesses, they were forced to shut down. Well, they'll open up just as quickly, and when they do open up, they'll want the materials that you're contracted for pretty quickly. So I think just looking at all of those factors into your forecasts, and the other thing to factor into your forecast, which some people do almost forget about, is how do you layer in some of the government assistance programs and make sure you incorporate things like the queues into the program, when you do start bringing people back, or if you're currently having people on staff. So one of the questions that did show up was if I'm a Canadian taxable corp owned by a US corporation, do I qualify for queues? And my understanding is the answer there would be yes. I don't think that ownership is an issue.
Okay, thanks for answering that. Let's see what other questions we have. Yeah, so this is on, what suggestion you'll have for, as the economy recovers, there'll be a lot of need that private sector has, not-for-profit have, in terms of, restructuring, in terms of pivoting, in terms of really, coming up with different business models. What do you think, what is your advice to MBA students that are right now about to graduate or that are coming in how can they be useful? How can they equip themselves so that they can be useful to the private sector?
Wow. Well, look, I think that the basic skills before COVID are going to be the same ones that are required after COVID, right? So I'm hoping that this is a pause as opposed to, you know, a cataclysmic, you know, economic downturn. And certainly, you know, the governments have shown the willingness to certainly spend the money necessary to avoid, you know, the latter. So I think that you know, it doesn't you know, require necessarily a rethink about all your skills. I think the challenge is going to be more about the companies, you know, having the financial wherewithal to actually hire people, and you know, time will tell on that one. So I don't have anything more brilliant than that. I don't know, Doug, if you've got anything.
No, I think that's good.
So
okay, thanks. There's a question on the rent reduction program, the commercial rent assistance program that was announced today by Ontario and earlier by the federal government. Do you have any details that you can share about that?
So I'll be honest, I wasn't aware Ontario had. I know that the Canadian government has stated, I think it was Thursday or Friday of last week, stated that they were going to bring in a program that was going to provide support to landlords, and presumably allow them to finance, you know, provide financing support. To my knowledge, you know, as of yesterday, I don't think there was any details out on that by the Canadian government. I am aware of one that was implemented in Nova Scotia, and it really wasn't a rent reduction. It was financing to landlords that were hit with deferred rent situation, and it was capped at $50,000 per landlord. So that's not going to go very far.
Mm-hmm. Yeah, there is some information that is started to come in. You know, the announcement was made, I think, around noon today by Ontario, and I think they're putting about $900 million towards it. And this is kind of, I think it's forgivable loans, and this is to property owners, you know, both tenants as well as landlords. It is, you know, it's contingent on, predicated on the landlord reducing the overall rent for the 3 months of April, May, and June by about 75%. And if they do that, then there is a government assistance, you know, where I think 50% is covered by the combination of the province and the feds. So there's more information that will be coming out. I'm hoping that either over the weekend or early next week. Okay. One last question that we have here is, it's about the new normal. You know, when will business start, and with what precautions, and what will that new normal look like? Anyone wants to take that?
Well, I mean, I think a lot of that ties into, you know, I mean, some of the discussion on auto, but, you know, again, I think as business owners, you know, the new normal, you know, is going to involve, you know, some additional costs. I mean, certainly on the operating side, you know, you talk to people in the, you know, in broadly based in any manufacturing sector, and, you know, with the, you know, spacing of workers, the, you know, possibly, you know, having additional shifts, you know, and then you also get the, you know, I mean, what personal protection equipment are you going to provide to your employees? You know, are you going to increase the number of, you know, shields in the workplace? You know, I think there's going to be a lot of added costs, that are not going to go away, in the short term. I mean, I think it is going to become a little bit of the new normal, and that's going to be an added cost just from a operating activity perspective. The demand side of things, I mean, Rakesh, I think it's, I mean, there's lots of macroeconomic information on it. As Nick said, is it going to be a bounce back? Is it a V, a U, an L? I mean, what shape does the curve, take? I think if people get back to work in Windsor, from the, assembly plant perspective in May, to some degree, and, the feeder plants and services, that obviously is going to, help consumer demand on things. And that's going to help, all the service businesses in Windsor. I mean, is it going to stay at a reduced level for, a midterm period of time? I mean, it may, right? I mean, if you're if you're running a big bar on a let Ave, I'm not sure that you're going to have a big crowd in there, the end of May. Although I don't know, the younger crowd may be there. So,
yeah. I mean, the only other comment I might make in terms of how businesses themselves operate is that I think all organizations are going to need to, obviously, manufacturing is different because physically, you need to have people there. But I think for office workers, each organization should be going back at the end of all this and evaluating kind of what happened to their productivity. And I think to those organizations that were able to maintain the productivity while working at home, that opens up a lot of flexibility in terms of how you design your go forward business operations.
Yeah.
Right. So.
All right. Well, thank you for that. We've run out of time. We're over anyways now. So I want to wrap up this webinar. I want to thank both Doug and Nick for sharing some really good insights and for educating us. Clearly many of the decisions that companies will have to take won't be easy, but I think it'll be necessary. Companies, business owners need to look into their businesses very carefully, explore all options, and time the restructuring right. Make sure that you're taking advantage of all the programs, and you're communicating to your lenders in time, and working closely with your supply chain. So we have a few more webinars that are coming up that we have finalized. We would be happy to have you back with us next week. There are 3. There is on Wednesday the workplace leadership, promoting mental wellness, which is something which many business owners have told us is extremely critical for them. Not just for themselves, but also how do they help their employees, their staff. So we'll be having Rana Walsh along with Aligned and Well, that they'll be coming in and sharing their insights on that. Post that, we will have on Thursday, the 30th, it will be tax preparedness in the economic downturn. That will be on Thursday. And then on Friday, we will be bringing in Minister for Economic Development for the federal government, Melanie Joly. And she will be coming and joining us a little bit at a different time. It'll be in the morning, I believe from 9:45 to 10:30. So please mark your calendar for all these 3 webinars in the coming week. And if you have any questions you want to send to us beforehand, please do that so that we can provide it to the panel, to the speakers. And also, if there is any input you have, any concern you have that you want us to represent your concerns, bring it to the appropriate level of government, please feel free to send it to us. You can email that at info@windsor-essex-chamber.org. As always, we are there for you. We are available on phones, on emails, so feel free to reach out to us. We want to be there for you at this time, and we are your voice. We are the voice of business. We will make sure that your voice is heard. So with that, I thank you for being here today. I wish you a very pleasant evening and a very pleasant weekend. Stay safe. Take care.
Yep. Thanks, Rakesh.
Thank you.
Thanks, everyone.
Yeah, thank you, everybody. So.